Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. We are in the heart of earnings season, and one of the most disappointing earnings reports that I have seen recently is Lucid. Now, this is one of the up-and-coming electric vehicle automakers that's trying to take on Tesla, coming in the market with a very high-end vehicle, very high-priced vehicle, and demand has simply not been what investors expected. So this earnings report, I think, really tells us a lot about the state of the company, not only its production, where it's at today, as far as getting vehicles out of the factory, but also where demand sits. And that's actually the biggest story here. I'm Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube and share this video with anybody you think would be interested in the electric vehicle space. Let's dig into the numbers here, and the one number that I was looking at in particular when Lucid reported earnings. I want to actually start with third quarter results because this gives us a baseline for which to look at the most recent quarter, which is the fourth quarter 2022 results. And this is the number to look at right here, reservations. As of November 7th, 2022, 34,000 reservations is what they were reporting, and $3.2 billion in potential sales as a result of those reservations. So what did that look like 3 months later? Well, reservations go from 34,000 units to 28,000, and potential sales goes down to $2.7 billion. Now, production was almost 3,500 units, so not all of that number was people canceling their reservations. But it is worth noting that there was a significant number of people canceling reservations, and Lucid absolutely did not fill the backlog despite having relatively low production. So that's really a bad sign for the company's demand. And as much as supply and ramping up production is really an important piece of the business right now for a company like Lucid, demand is equally important. If you don't have demand for those vehicles as you ramp supply, you're just simply going to be stuck as a business. And that's what is the most concerning figure coming out of this earnings report. Let's look at the other thing that jumped out to me. And this is a small thing, but this is something that I look at often in earnings releases and presentations that have similar structures from quarter to quarter. So if a company is reporting one number every quarter, every year, you expect them to continue reporting that number. This is the one that stuck out to me in this quarter. Cash and cash equivalents and investments, $3.85 billion. This was the third quarter update. Now go to the fourth quarter update. And now they're saying we're not going to highlight that number in key statistics. We're actually going to give total liquidity, which is $4.9 billion. Liquidity is basically money that you can access if you need it. It's not cash that's sitting on your balance sheet. So let's dig into those numbers a little bit further. So here's a look at financial highlights, specifically the balance sheet is what I want to look at here. $6.3 billion in cash on the balance sheet as of the end of 2021. That was down to $4.4 billion at the end of 2022. Now that's to be expected. As a company is building out production, they're building factories, they're buying equipment, they're going to be spending money on capital expenditures. That we should expect. But look over here, we successfully completed an at-the-market offering for net proceeds of $594.3 million. So basically sold shares to the market for almost $600 million, and then had a private placement with aggregate proceeds of $915 million. So why is the cash balance as good as it is today with $4.4 billion? It's because Lucid sold over $1.5 billion worth of stock. Without that, the balance sheet would be looking really rough right now. Let's move down a little bit further and look at revenue and cost of revenue. Revenue was up to $257.7 million from $26.4 million a year ago, but cost of revenue was $615.3 million. On top of that, there was $221.3 million in R&D expenses and $170.9 million in operating expenses. This is the line here that might make earnings a little bit confusing for investors because the net loss actually dropped by about 50%. But that's because of this other line. There was a gain of $277.2 million versus a loss of $560 million a year ago. I'm going to cover what that is in a second, but you can see the numbers above. It's very clear that Lucid is burning far more money than it was a year ago, to the tune of nearly $1 billion per quarter. That should hopefully come down over the next few quarters. But again, we're talking about reservations falling. So this is not a business that's in a very stable position right now. Another metric to look at is cash used in operating activities, almost $650 million used in operations, and then capital expenditures of nearly $300 million. So you get a result of $938.4 million in negative free cash flow just for the fourth quarter, $3.3 billion for the full year of 2022. Given that cash level, that's just simply an unsustainable place for Lucid to be operating. All right, let's get to that gain of $256 million for the quarter. What that is a change in fair value of common stock warrant liability. That's stock warrants that they owe to other investors. There was a gain of $256 million versus a loss of $558 million a year ago. What does that come from? Well, that comes from the fact that the stock is down recently. So those warrants are less valuable. As a result, there's going to be a gain on the balance sheet from the value of those warrants being lower. So that's what we're looking at as far as the gain. And that is as of the end of, and again, that's as of the end of the year 2022. So that was a low for the stock price. So that's a gain that's probably going to reverse in the next couple of quarters as well, unless the stock keeps going down. But basically a paper gain and not a real cash gain. At the end of the day, any of these electric vehicle companies that are trying to ramp production, build their production facilities, make a vehicle profitably, you're going to want to see unit economics from a cost side be sustainable, and also demand from a revenue side continue to grow. We saw this last quarter with Rivian and Lucid. Lucid was actually losing reservations in the third quarter as well, while a competitor like Rivian was gaining reservations. Now, Rivian will report next week, but if that trend continues, this is a Lucid specific problem. And I think that's really the thing that's notable here. The price point in these vehicles and what they're making, the sedan, the high performance sedan, is just probably not a product that's going to fit in the current market with higher interest rates, with less stock market gains, with fewer people being flushed with cash. That's just not a great product to have in this market right now. That's why I think this is really a company that's going to struggle. I thought this was a really terrible earnings report, and so I just don't see a lot of upside for the stock. This is one I would absolutely stay away from right now. As much as I like the EV space, Lucid is not a stock I would be betting on. If you have thoughts, leave those thoughts in the comment section below. I'd love to hear from you. Subscribe to Riiv Investing here, and I'll see you here next time.